Here are a couple of more growth and income stock picks from our growth and income stock strategist, Todd Bunton, who wants you to know about Home Depot for one, right?
Yeah, Home Depot, obviously the big home improvement retailer. They have over 2,200 stores in all 50 states. They're also in Canada and Mexico. And the company benefits from the recovery in the housing market. And that was on display. They actually reported earnings on August 20th. They saw 11% growth in same-store sales, which was actually their fastest growth since 1999. So even faster than 2005 and 6 during the housing mania. So very solid earnings momentum for this company. They delivered a very solid beat. You saw analysts raise their estimates pretty significantly higher after the beat. If you take a look at their price to consensus chart, you can see a very steady rise in consensus estimates for both this year and next year. Sent it to a Zacks rank of 2, which is a buy rating. Company's delivered 5 consecutive positive earnings surprises too. So very good earnings momentum. Good growth story, even especially for a company of this size. Based on consensus estimates, analysts expect 19% earnings per share growth this year, 18% growth next year. So very good growth. Again, a lot of that's going to come from a recovery in the housing market. And like I said, very solid same-store sales, good operating leverage here. So good growth story. Good earnings momentum, very solid yield. They pay a dividend that yields 2.1%. And if you look back over the last 10 years, they've increased that at a compound annual rate of 21%.
Wow.
So very shareholder-friendly company to go on top of that. If you look at the valuation, I'd say it's pretty reasonable. They trade about 19 times forward earnings. That's in line with the industry average. And given all the favorable fundamentals here, I'd say 19 times is pretty reasonable here, especially if you have about a 3 to 6 month time horizon. This could be a solid total return pick.
All right, here's a bank you want us to know about, East West Bancorp, EWBC, the ticker.
Yeah, this is a unique one. They have 120 branches worldwide. And you think East-West, you think, okay, are they on the East Coast and West Coast?
Yeah.
That actually means, think farther east, so China.
Oh.
So they do have a couple branches in China, but they're primarily focused in California, in Southern California, and the Bay Area, primarily focused on Chinese Americans. So they want to be a financial bridge between the Far East and us here in the West.
For that community
specifically? For that community, pretty much. That's who they target, yeah, Chinese Americans. They have over $23 billion in assets, so they're definitely not a small bank. Like I said, 120 branches. Most of that's in California. The company just delivered its ninth earnings beat in the last 10 quarters. So very good earnings momentum going on here. They're seeing a lot of the other things that banks are seeing, which is solid loan growth, net interest margin that's held pretty steady, and improving credit quality. And and actually after their last beat, management raised guidance for the remainder of the year, and that prompted analysts to raise their estimates. As you can see here, in the agreement and magnitude of Zacks consensus estimates, you can see analysts unanimously raised their estimates for both this year and next year after the last beat. Sent it to a Zacks rank of 1, which is a strong buy rating. So very good earnings momentum. If you look at consensus estimates, analysts expect about 12% earnings growth this year, 5% growth next year. On top of that, you're getting a dividend that yields 1.9%. Now, they did cut that during the financial crisis like a lot of banks, but they've increased that enough in the last couple of years that it's actually above its pre-cut high. It's a very solid yield. They're actually buying back stock, too, which is something you don't see a lot in the banking industry. So very shareholder-friendly. Valuation's reasonable, too. They trade about 14 times forward earnings. The industry multiple is 15 times, so it's a small discount to that. A little bit of relative value to go with the strong earnings momentum and earnings growth here. A lot to like.
All right. Own either one?
I do not.
Check out other stock picks. They're on our website, Zacks.com. If you're not there already, get on over, check them out, check back often because they change just about daily. With Todd, I'm Terry Ruffalo.